Did you know that Russia has been diversifying its reserves by purchasing enormous quantities of gold with its revenues from oil sales? Russia has been the biggest, most active gold accumulator of all the central banks that make their reserve operations public. In this video, we will be exploring why Russia is buying up all the gold. Stay tuned till the end, because our last point may surprise. The United States and European Union have placed the Bank of Russia on their blacklists. Many people have been wondering why Russia has been buying so much gold. It is now evident that one of Putin's main reasons could be that he knew he was going to get blacklisted. Alongside the G7 and the European Union, the U.S. will continue to inflict swift and severe economic penalties on the Putin dictatorship for its crimes in Ukraine. As part of this effort, the U.S. has announced devastating economic measures, including the prohibition of new investment in Russia and the imposition of the harshest financial sanctions on Russia's largest bank, several of its most vital state-owned enterprises, and Russian government officials and their families. The U.S. and over 30 allies and partners from across the globe have imposed the most significant, coordinated, and extensive economic restrictions in history. Over 600 private enterprises have already abandoned the Russian market. Russia's supply networks have been badly impacted. Russia will very certainly lose its standing as a significant economic power, and it will continue its long slide into economic, financial, and technical isolation. Two of the biggest financial institutions in Russia, Sberbank and Alfa-Bank, have been sanctioned. This move froze all assets of Sberbank and Alfa-Bank that are connected to the U.S. financial system and restricted U.S. citizens from doing business with them. Sberbank has almost one-third of the total Russian banking sector's assets and is crucial to the Russian economy on a systemic level. Alfa-Bank is the biggest financial institution in Russia that is privately held and the fourth largest financial institution in Russia overall. Putin has prepared himself for this time. Since 2014, when it was slammed with a slew of economic restrictions for unlawfully annexing Crimea from Ukraine, the government of Russia has been implementing measures to withstand sanctions. Putin has built a fortress around the Russian economy to withstand foreign shocks. Clearly, the Russian government has a motive to conceal the economic effects of Western sanctions. Moscow has been accumulating gold and bolstering its stockpiles. Prior to the invasion, Russia owned the world's fifth largest collection of foreign money and gold reserves, totaling over $630 billion. This stockpile was sufficient to maintain the government's financial sheet and the ruble. Since 2014, Russia has increased its gold reserves, which are exclusively housed in domestic vaults. The U.S. has blacklisted Russian transactions involving gold, but some nations continue to do business with Moscow. A windfall from oil and gas sales is also allowing Russia to continue building up its emergency reserves. It increased its emergency reserves by $12.7 billion between April and June. This money will be utilized to maintain economic growth stability, notwithstanding sanctions. Russia is able to convert gold to cash. Putin may trade gold for cash on uncontrolled shadow markets with criminal organizations and other pariah governments. He might use gold to acquire illegal weapons and other products and services. As a hedge against financial penalties, gold is appealing. Foreign foes are unable to seize money stored in a state's vaults absent an invasion. Outside of computerized financial networks, it may be physically transferred throughout the globe, making it difficult to trace. In severe situations, governments may swap gold for foreign currency in uncontrolled precious metals markets. At the same time, Russia is still exploring oil and generating foreign currency as a result. Gold may provide a lifeline when other more traditional investments cannot. Venezuela is a prime example of a nation that used gold as currency. Hugo Chavez, the country's president, took the foresightful choice in 2011 to return 160 tons of gold reserves from Europe. This action was crucial to Chavez's successor, Nicolas Maduro's capacity to remain in power despite multiple rounds of crushing U.S. sanctions, starting in 2014. And guess who was one of his main supporters? Russia. In response to continuous U.S. sanctions, Russian Foreign Minister Sergei Lavrov said at the start of 2019 that his nation will do absolutely everything to defend the beleaguered Maduro dictatorship. Russian support took several forms, ranging from weapon supplies to Venezuela to assisting the South American nation in developing its own oil-backed cryptocurrency to circumvent sanctions. Russia also aided Venezuela in exploiting its gold reserves by moving tons of monetary gold throughout the globe for sale on uncontrolled markets. Physical gold may also be used as direct payment for products and services, in addition to its usage in shadow markets. In 2020, Iran took gold as payment for its assistance in repairing Venezuela's crippled gas refineries. In accordance with a 2017 rescheduling agreement with Russia, Russia may have accepted gold as payment for Venezuelan obligations. What made these sorts of deals feasible is precisely what makes gold so archaic now. It is tangible. Shadow market gold transactions do not depend on swift financial messaging or correspondent bank accounts, which electronically transmit money from one account to another. Russia might sell gold to illicit organizations. Who would now purchase gold from Russia? One option is criminal organizations. Organized criminal organizations such as drug cartels are drawn to gold as a form of wealth storage, since it is stored outside of the financial system, reducing law enforcement's ability to confiscate their assets. Criminals and kleptocrats exploit booming illegal gold markets to launder money. Additionally, countries concerned about sanctions may purchase gold from Russia. Nonetheless, China is the most significant prospective government gold buyer in this situation for a number of reasons. First, China has shown a genuine desire to increase its gold reserves. According to statistics from the World Gold Council, Beijing increased its gold holdings by over 900 tons between 2009 and 2021. Second, in light of recent events, Beijing may be eager to increase its holdings for fear of facing penalties similar to those imposed on Russia for its own foreign policy acts in the future. Thirdly, purchasing on the shadow market would provide China the power to demand a lower-than-market price for the metal, which is now extremely pricey. Finally, with a 2,600-mile land border between Russia and China, moving gold from Russia to China in exchange for cash, products, or services would be very easy and difficult to trace. Russia's increased gold purchases over the last year are a result of a desire to diversify its reserve holdings. The nation surpassed China as the fifth largest official sector holder of gold in the world last year. In 2018, the central bank purchased 8.8 million ounces of bullion, surpassing the previous record of 7.2 million troy ounces established in 2017, and new data indicates that the purchasing has not ceased. Rather than a lack of confidence in a particular currency, diversification was the driving force for the purchases. Russia has been compelled to default on its debts, which is something Putin may have seen coming. The Treasury Department of the United States has said that it will no longer permit the Kremlin to make debt payments to American bondholders, therefore taking a key step toward forcing Russia into a default. This will make it very difficult, if not impossible, for Russia to avoid a default, a violation of its national debt obligations, which Moscow has sought to avoid since initiating the conflict in Ukraine. Defaults on debts could make it so that many countries won't want to do business with Russia. It could be one reason it has been buying so much gold. The Biden administration placed sanctions on Russia's central bank immediately after the start of the conflict, but gave a special license exempting bond payments, enabling Russia to continue to meet its loan commitments. However, this license has now expired, and the Treasury has said that it will not be renewed. Therefore, American banks will be unable to accept Russia's debt payments if it attempts to make them. The Russian government owes over $20 billion in bonds to the U.S. A Russian default would be catastrophic for its international reputation. Governments issue debt to obtain funds, but they must make timely payments in order to attract foreign capital and guarantee low borrowing rates. Russia has honored its commitments to foreign bondholders despite repeated international financial restrictions imposed since the beginning of the conflict in late February. The inability to make these payments, according to some experts on sanctions, would have long-term repercussions for Russia, guaranteeing that investors would avoid the country even after the conflict ends. Gold from Russia is prohibited in the United States and other nations. However, if Russia offers a discount, it will still find purchasers. New Russian gold markets have been in the limelight, as the G7 has declared a restriction on new Russian gold. This restriction has already been proclaimed by the United Kingdom, the U.S., Japan, and Canada. Russian gold will likely be sold at a discount to eager purchasers, as was the case with Russian oil. Some corporations with substantial exposure to Western markets will likely avoid purchasing Russian gold, while others may benefit from the price reduction. As a consequence, Russian gold shipments will decrease in the near future, but it is uncertain whether this fall will be considerable. Long-term, the situation for Russian gold producers will likely normalize, as they will sell their gold to customers such as the United Arab Emirates, India, China, and Turkey. According to statistics from the World Gold Council, jewelry production continues to be the primary source of gold demand. Therefore, Russia should have no trouble exporting gold to nations with a high need for jewelry. There is a strong likelihood that Russian gold shipments will return to pre-sanctions levels in the long term. What do you think will happen to the Russian economy in the next few years? What else would you like us to talk about in our upcoming videos? Let us know in the comments below, and make sure to subscribe and turn on notifications so you don't miss out on any of our videos.